MyStockScanner Live, powered by 3-Point Playbook. This is where investing gets simpler. We scan the headlines, we break down the numbers, and we run today's stocks through the 3-Point Playbook. 3 simple questions guide every pick that we do. Is it a quality company? Does it have an upside? And is now the right time to buy? You can save time, make smarter choices, and grow your money even while you're sleeping, because we tend to make you sleep peaceful at night with the 3-Point Playbook. Hans-Henrik Nielsen, a jam-packed week, earnings and numbers, and a market that seems to rebound after the hectic weekend. Did the Monday surprise you?
No, not especially. We told our members in the weekend that we didn't see any real panic in the market, except in the silver market, of course, and gold. So that people should start out the week with a bit of a calm approach.
You always say that try to sit in your hands when you get giddy in regards to the market. It is that little thing about taking maybe 10 deep breaths before you rush into action.
We just know that retail traders, you and I, the dumb money, we tend to trade stupidly when trading on our emotions, so we shouldn't.
Yeah, we try not to do that. The 3-Point Playbook portfolio sits at 4.1% for the year. After a month, we are very satisfied with that. Last year, of course, 34.48. The market, we thought it was going to cool off after the weekend, but it's actually pushing higher. NVDIA, the standout exception, down nearly 3% after reports its OpenAI investment has stalled. Today, we got big numbers from big companies in Denmark, DEMANT and NETCOMPANY. We're going to take a closer look at them. And there's strong US momentum as PALANTIR beat expectations on solid business sales. It's also Tech Tuesday, where Bernstein is raising the bar, including a $1,000 price tag for SANDISK. And they are keeping Apple at outperform as well. And on the macro side of business, global bond sales just hit 1 trillion at record speed. What does that mean for you as an investor and as a person who's going to go into the market, where we also see gold and silver rebound? We will tell all about you in this show, but let's get into it, and let's start with the hearing aid company DEMANT. And if I look at the ticker right now, Hans-Henrik, ooh, that's not a pretty sight. 12.3% down, and they're even dragging GN Store Nord with them, which is sort of a mirroring effect when it comes to hearing aids.
It tends to happen in the same industry. If they're close to each other and one is dropping like a rock, then investors are thinking, oh, it might not be the only one. And what we see with DEMANT is that the numbers are actually okay, but they show a bit too little growth, organic growth, and that scares the investors. Some of the guidance is absolutely not impressive, so they are out announcing that they will fire I think it's 700 people, 150 in Denmark, and as you can see, it drops quite a lot. It is a bit of a, we had it compared to GN Store Nord in a face-off just, I don't know, month and a half ago. And it's actually a fairly good quality company, free cash flow going up. We can see revenue is stalling a bit here. What is with it is that it's lowly priced compared to when it had turned around earlier on. That could get a real normal value investor to buy in here. What we normally do is we look at the chart and say we're waiting until we get some confirmation. And as long as we have a lot of double red on our MTI indicator and we're not above the 200-day moving average, we don't touch it.
In regards to the 200-day moving average, and I know it's a thumb rule for you that you really don't want to touch stocks that's under 200 days SMA. Why is that?
Yeah, there's no magic in it. It's just a lot of investors are looking at the 200-day moving average, and it's just over many decades it has been known to be a kind of a separating line between a bull trend and a bear trend. So I know some people are using 120-day moving average. Some are only using the 50 here. There's no right or wrong. The important thing is to stick to the same every time.
Let's take a look at the other company in Denmark that came with numbers, and that was NETCOMPANY. The market reacted, I won't say surprisingly, it was just a very different reaction from DEMANT. They basically went like the French went, that was it.
Yeah, and to be honest, their numbers were within the expected ranges. They had an 18.6% in revenue growth, and market expected 15 to 20. So that was kind of in that range. If we look at it, let me just share my screen again here. Because we have been in NETCOMPANY, made a bit of money on it, but went out again. As it can be seen here, it's in the platform I have. It's actually okay today. It's up 4% right now, but as we can see, it has been way down here, and now it's moving up again. So it is as if the market is slowly getting a look at the numbers. Often when we see in the morning when the numbers land, then people just trade at the first glance, and then over the day they tend to figure out what they actually think about it. NETCOMPANY here in the 3-point playbook is a really good quality company. Earnings per share going up, revenue going up, PEG ratio is good, quality score, free cash flow is going up, everything that we would like to see in a company basically. And we were in it from down here somewhere and went out of it again. But as you can see, there's some really good upside in it if they hold their earnings projection. So I think you can see the arrow here. We went into it here, went out of it here, made, I don't know, 5-10%, something like that. If it goes up today and it stays up and shows some good bias in there, we might just enter again at some point.
And it's one of the I'm almost going to say the rules that you teach people is that don't be afraid to venture into a stock, go out of it, go back into it again.
True. We never know when this is. This could have been the place where a 500% uptick started. It could also have turned around. People trying to explain to you that they know where the stock is going. They are, excuse me for my French, but they're full of shit. Because here you could have taken it here back in 700 something. And thought this was the place and good quality and everything, and it turned around. Here we would have gotten out right away at 680 or 670 or something like that, and we would not have been in it. Maybe a little while back here, and we were in again here. But you never know when the big trend starts. So we jump on the trends, we stay in as long as the trend runs, and that's basically it. There's no magic to it.
And it's interesting what you just did with the graph is that you pull it, you stretch it, and you put it back again, and all of a sudden it looks like it's just going sideways for a long time. Indeed. Whereas in the beginning we were kind of going, oh, it's an uptrend.
Indeed, and what actually happened is that we can see that sideways movement is actually starting back here. So it was actually expensive here, but here where it was expensive is almost the same level as it's cheap now. But that is because they have stacked on some earnings, and all of a sudden, oh, now the earnings matches the price, or the price is cheap compared to earnings. So a sideways movement can be what it takes for a stock to all of a sudden be cheap.
We will definitely keep you posted in regards to our thoughts about NETCOMPANY. As said, as a disclaimer, it's a stock that we have been in and are looking at it again. It's Tuesday, according to my calendar, and I'm glad to say it's the same calendar everybody's using at the moment. So it's Tech Tuesday. We predicted the market would be chilled after the weekend. It went up apart from NVDIA. 2.89% down. In the aftermarket, it was up 0.5%. But Hans-Henrik, that's a big move when it's a big company.
It is, but looking at the percentages, I'm not that worried. I got a question in one of the groups just before the show started here about, is it time to take off? I think we went into NVIDIA something like here or here, kind of. I think it was up here. So we are down a few percentage points here. As you can see, there's a big support area down here. We are still in an uptrend. NVIDIA is looking really good on all the metrics we look at. So I'm not really worried. We can see in the pre-market, it's actually up, 0.5%, 1/3%. So I'm absolutely not concerned about NVIDIA. One of the reasons why it dropped was that they indicated that they want to skip that deal with OpenAI, that $100 billion, with the circular finance, where we have some money, we actually give it to you so you can buy a chip from us, and it's kind of a circus trick. And we have been predicting that at some point that deal implodes, and people are afraid that is what's going to happen now.
And let's just say that we're more worried about OpenAI than we are for NVIDIA.
Oh, OpenAI is a big black hole in the ground. That is not going to exist in a few years.
But let's go to a stock then that we love to hate or hate to love. I am not sure which one it is, because they came with numbers yesterday. PALANTIR, which is a bit of a conundrum for us, because let's just say that the price for it, Hans-Henrik, is insane. But it seems like they can live up to the insanity.
Yeah, well, they're growing really, really nicely. The numbers they came out with just, I think on some of the segments they were up 170% year over year, and overall 70%. And we have actually not doubted they would come out with great numbers. They're really in favor with Trump and ICE and attacking Venezuela and all that military intel things. But they also showed that they have really gotten a good hold of the of the normal private sector. When we look at it, first of all, we would not have been in it anyway, because it actually broke down. We would have started going out up here somewhere. So now it pops up to 164, and you can ask yourself, would we enter it now? And to be honest, it looks like a good quality company. The place where we started to look at it in the beginning was down at 20, 25, 23-ish, somewhere down here. But they hadn't been earning any money at that point, so we couldn't go in, not according to our rules. It was tempting, but we couldn't. That means we lost, or we didn't get a 8-10x uptick in the stock. That can be a bit annoying, but the fact is that when we look at the pricing of it right now, they are priced at a price earning of almost $350, meaning that you pay $350 for each $1 of profit they make. That is insane. And if they are, let's just have a quick look here. It can actually look okay if you look at the value chart, but that takes into account that they have to sell at over 300 in price earning. I don't buy stocks at 300, and they were up at 800 at some point, I think it was. We can play around with the numbers. If, for instance, they land at more reasonable numbers, like here, 60, 80, and 100 in price earning, even with great numbers, well, they can drop 30 to 60%. But we can play more around with the numbers, because imagine that they can stay at these numbers here. If they can keep growing the next years here at 40% per year in earnings, which they did last year, here, there's a fantastic case in it if they can keep selling at 300 PE. But doing that is what you call the greater fool theory, because the pricing is not really based on something tangible. So you need to buy it and then hope a greater fool comes along to buy it of you more expensive. Not saying that can't happen, because it has happened a million times in the market. It's just not the way we trade. We want a fair pricing, and we don't think they are the fair price right now.
It is a question about how many times you've seen this before, whether you saw it in Novo Nordisk or you saw it in NVIDIA that we just talked about. You saw it in Apple, you saw it in Microsoft, you've seen it with a lot of companies. One of the companies that I won't say surprised, but it definitely spurred a moment in regards to Bernstein. They came out and said the price tag for this company per share should be $1,000. It came after very strong earnings. And Hans-Henrik, that is a rocket ship. I know that we all think about SANDISK in a way where we look at a thumbnail that we had for our computers, but that's not the way to see it. You look at electric cars and you say, that's where the RAM goes.
Yeah, well, at least some of it. There's just an crazy demand for RAM, for memory right now. Some of it goes into cars that spend a lot of RAM, just having the automated driving systems and the entertainment in the car and the battery surveillance and everything. A lot of RAM, but also our phones and data centers and everything. And as you can see, it has been a wild ride here to 15-20x up. You could ask, why don't we have it then? Well, we have some others. We have Micron. We have looked at SK Hynix and Samsung and so on. But SanDisk, well, there's a good reason why we haven't been in it, because the earnings are projected to come this year, next year, meaning that we are not buying stocks that haven't showed anything. Because Jesper, if someone wants to buy my company and I said, well, we have been losing money for 3 years, but next year we're going to make $1 billion, so that is how I price it. Then the buyer might say, I would like to see at least 1 year of that $1 billion earnings before I start to price your company from that. And that is where we think there's no doubt that SanDisk is going to make a lot of money, but no one knows how much. No one knows what will happen in the memory market. So right now, well, we cannot really do anything with the numbers. It's just it's not a stock for us.
Let me use Bernstein to segue into Apple, which is maybe even more known for our members and people watching. They were reiterated by Bernstein to outperform. Different kind of story, of course. Is that fair? Is that fair value? Can they live up to it? Because they have shown their way to make money for a long time.
Yeah, absolutely. They have. And we can see here, earnings per share has actually stagnated over some years, but start to go up a bit. They're not the highest grower, but they're showing some really interesting numbers, both on their iPhones, as we saw the other day, but also in the AI space, where they compared to, for instance, OpenAI. OpenAI don't have any money. They have to go out and do all sorts of weird deals with people. Apple is one of the most liquid companies out there. They have, I can't remember, $700 billion or some insane amount. So they can throw money after basically anything until it becomes a success. What happened, and we looked at it the other day, we actually think it's too expensive right now. This is an area that have been looked at as fairly expensive before. You could say, well, if it becomes a winner in some sort of AI niche, is this too low of a price earning? And yes, it might be, but right now we will pick better stocks.
I have a quick question in regards to macro, and I know that there might be one or two running for the door right now because macro seems to be totally uncomprehendable if you're just a retail investor. But of course, it marks the market in that sense, that interest rates and stuff like that. And I saw a headline in the news this morning: global bond sales reach $1 trillion at their fastest pace ever. What does that mean for us as retail investors?
It's basically the world. You watch the market as a bunch of junkies, and their drug, their dope is debt. They need cheap money, and well, right now it's not that cheap. But right now, the entire global market has borrowed $1 trillion. You could ask yourself, from whom? And that is a good thing. We invent money out of the blue and then borrow it from central banks and stuff. However, 1 trillion in a month, that is a couple of weeks faster than we normally reach $1 trillion. And it's not a good sign, is it? Interest rates are going up. We can see that in US, they are the highest in about 5 months. EU staying a bit stalled here, but Japan going upwards. So the world borrowing more money gives them more interest to pay, and it's not there. At some point it collapses.
And maybe that's why people are venturing into gold and silver, except for this weekend where they took a breather, I should say, and it dropped like a rock. But it's slowly coming back. It's rebounding after a historic wipeout. And as a matter of fact, Hans-Henrik, we asked our members on our Facebook groups in regards to where their thoughts were a week ago, where silver price were going to be. And in ActionSnack, they got it right, because 42% of them said under 80. It is a tad over 80 right now. Action Illusion, not so much, not so convinced about under 80 at 33%. They were more like over prices. And our members, sorry to say, members disappoint me. No, I shouldn't say that. But 90% of them thought it was going to be over 120.
But remember, that is the 1st of March. That is almost a month from now. No, but I mean it.
Yeah.
Anything can happen. What happened Friday was simply a washout. That was the margin requirements going up, and there were things going on in China, and people have to hedge. In the Asian market right now, you see physical silver trading at $120 to $130. So where silver will be in a month is 100% impossible to predict. I wouldn't be surprised if we see silver well above 100 in a month.
Okay, let's play the odds then and ask our members if they're that smart, and we do think they are. We're going to put up a poll today in the afternoon in all our groups asking what do you think about the gold prices, because they of course also took a tumble, not that fast as silver. Hans-Henrik, where's the gold price going to be March 1st?
Well, yeah, I don't know. Above 5,000, somewhere between 5,000, 5,300, something like that.
Okay, well, there we go. We'll put up the poll, you tell us, and we will tell you next week how your numbers are, and then we'll save them for March 1st and see if you're right or wrong. Being in the wrong, I could say that was Walt Disney yesterday. It's not him personally, but the company Disney, because they really made a doodle. And it came down to they are firing all cylinders. It's not because they are not doing business, but their costs seem to be out of hand. They were dropped by the market by 7.5% yesterday. Not a happy ending.
No, as you say, they are good at putting on revenues at the top line. The problem is that doesn't really matter if the margins are not there, if they don't transform that revenue into bottom line, and they didn't. That is just they are under pressure on a lot of different lines, and we did a comparison between them and Netflix the other day in our Friday face-off. And that came out in favor of Netflix. If we look at Walt Disney, it's not that they are a bad company, actually. Good quality, stalling earnings per share, stalling revenue, free cash flow going up, though. So they have a lot of free cash flow to put into new ventures. However, there is some upside in it, absolutely, over the next couple of years, and it could be argued that this could be a place to enter, definitely. We don't like too much these value channels going sideways. We do like them to turn upwards in a 45 degrees angle. So I wouldn't say it's a complete no-go, but for right now, as you said, they got hammered yesterday, and we would want to see some sort of uptrend before we start considering. I would much rather pick Netflix.
But it's also because we never buy at the bottom. It's not a rule, but we don't try to hit bottom, and we don't try to get out on top in that sense. We will get in somewhere after the bottom, and we'll get out after the top. It's not the way it is.
That is how it is. We people that claim they can predict exact bottoms and tops, they are either delusional or lying.
One thing that I'm going to take a look at now, and I know that this is not a site that you really want to see, Hans-Henrik, because let's just say this is not your favorite guy in the world. He basically have money raining, and he's looking forward to having even more money raining down on him when he does an IPO. The smart way that he did it was that he took SpaceX and he merged it with XAI. And then he came up with a number, or at least the market comes up with a number where they say the potential IPO for that company could be $1.25 trillion. Let me have your reaction and keep it under 15 seconds.
Really? Do you want my reaction?
No.
I think it's absolutely insane. It is estimated that SpaceX do $3, maybe $4 billion in profits per year. If they were to IPO at 1.25 trillion, that would be a PE of what, 400, something like that. And in the earnings, it should be counted that they have $6 to $8 billion in NASA and in government contracts. So, and then they merge with the XAI, that is losing $1 billion a month. So, and I bet you, before long, he's also merging Tesla into it, because they are also in trouble. They are not a winner on the robots or the robotaxis, or they are number 3, 4 in the world on both accounts. So you basically just take a lot of losers, put them in one ball, and then say, isn't something that negative multiplied by negative becomes a positive, and then magic, and people throw money at them at 1,000 PE. That is completely out.
But I totally get the way that you feel. and it is. It is a strange world sometimes. But let's look at the historical biggest IPOs ever. 2019, Aramco came out and did an IPO, was valued at 29.4 billion. We're not talking trillion, we're talking billions here. Far off.
A lot of sense.
And they make a lot of money. Number 2 on the list was Alibaba Group in 2014, 25 billion. And if we go back historical, we can go back to 2012, and a little tiny company had an IPO of 16 billion. They were called Facebook. Does that surprise you when you hear those numbers compared to what is expected?
Nothing really surprises me when it comes to Elon Musk's ability to pump a stock value. So what can I say? Had it been in Denmark, doing what he's good at, he would have been in jail.
Ooh, let's just keep that hanging right there. The jail time overhead of Elon Musk in Denmark. No, of course, there's a satirical comment there from Hans-Henrik. But Hans-Henrik, if we are serious for a moment, we have a big week. We had numbers today from NETCOMPANY and DEMANT here in Denmark. PALANTIR was up yesterday, same was Disney. Today we look at AMD, Merck. We're gonna get PayPal. So many numbers are coming in tomorrow. Google, Novo, Eli Lilly. It's basically everybody who's everybody at the dance at the moment. And we will try to keep you up to speed via our homepage, MyStockScanner.com. Anything apart from that I know that you're keeping an eye on, and that should be some economic numbers from the US.
Oh yeah, the job numbers Friday is a big thing. Non-farm payrolls. We'd finally start to get some decent numbers. Now let's see. They have a shutdown again in US, so let's see how. But we should get the numbers, and they should open up again. They said maybe today or tomorrow. But the non-farm payrolls, the job numbers, and the revisions of the earlier numbers. That is what really is a big thing for me this week.
And if we look forward also to the coming days, we have Wednesday Word tomorrow, we have Friday Face Off, and a lot of other things going on. Take a visit at MyStockScanner.com. If you're not a member already, you can get a 3 months membership. If you are a member, then we have our friends and family deal going, ambassadorship. You can become almost ambassador of MyStockScanner. If you refer somebody who becomes a member, you get 1 month for free. If you can collect a football team and have a reserve as well, that makes 12. Then you are basically free for an entire year. Read more about it at MyStockScanner.com. That's it for today on MyStockScanner Live. Remember, investing doesn't have to be complicated. 3 questions you should ask every single stock. Does it have a quality? Does it have an upside? And is the timing right? Save time, make smarter choices, and sleep easy with MyStockScanner. That's for sure. Happy investing out there. Hans-Henrik, see you tomorrow at 12.